live. I will now call this Inter-Township Fire Department Joint Board of Management meeting to order at 1:59 p.m. Do we have Shirley with us online? Not yet? Okay, we have quorum, so we can go ahead. I'll start with the territorial acknowledgement. In the spirit of reconciliation, we acknowledge with respect the history and living culture of the Anishinaabe, the people of the three fires known as Ojibwe, Odawa, and Potawatomi Nation, who have inhabited this land from time immemorial. We recognize that these lands are the territories of the Chippewas of Saugeen and the Chippewas of Nawash, collectively known as the Saugeen Ojibwe Nation, the keepers of this land. Georgian Bluffs is located on lands encompassed by treaties 45.5, 67, 72, 82, and 93. We reflect on our role as treaty people and the need to live in respect and peace and show respect to the first people who inhabit these lands and waters. And moving on to approval of the agenda, the recommendation is that the agenda be approved as presented. Could I have a mover and a seconder? Ron and Grant? Any discussion or any additions? Call the vote. All in favor? That is carried. Does any member wish to declare a pecuniary interest? Seeing none, we may declare at any time if one should arise. Moving on to public presentations. Any person who wishes to make a presentation to the board must register with the clerk at least 7 days in advance of the scheduled meeting. To register, you can complete the online delegation form at www.georgianbluffs.ca/delegations or call the clerk's office at 519-376-2729, extension 601. And today we have MNP here to present the 2024 draft financial statements. So I will, we have a recommendation to put on the floor first. Better not forget that. Recommendation is that the 2024 draft financial statements as presented by MNP be received for information. Could I have a mover and a seconder, please? Steve and Ron? Okay. Someone else must be joining us. Yep, Shirley, okay.
I'd like to thank the board for having me here today. I'm Robin Strangway-Calder, and I'm with MNP, formerly BDO. Effective January 1st, 2025, the Owen Sound office, engagement partners, and team members, along with 20 other offices, BDO offices that is, transitioned to be part of MNP, including all of the offices located in the Greybush region. MNP is a national firm, so we do continue to have national resources and specialty services available to us. However, we do get to keep that local presence and focus. The letter to the board and independent audit report will be from MNP this year. However, it will appear very similar to prior years because the communication is required under Canadian auditing standards. This year, your management adopted the new accounting standard relating to asset retirement obligations, which affected the reporting and disclosures of the financial statements, and removed that qualified audit opinion that was in the 2023 audit report. The preparation of the financial statements, including all the disclosures and the notes, is the responsibility of your management team. Although we can assist in the formatting and making suggestions on wording, all the numbers are provided by your management team from the accounting records of the fire department. MNP, as your auditor, is required to maintain independence to be able to provide an independent audit opinion. And at this time, I can confirm that MNP is independent. We would like to thank your entire management team for their assistance during the audit. Especially like to thank Sam and Nicole. If you do have any questions during the presentation, I encourage you to ask them as we go along. So I'm just going to give a highlight of some of the required communication if we want to scroll to page 3 of the report. Under the risk areas and responses, during the audit, we did not find any management override of controls. And in revenue recognition, the only new public sector accounting standard that was effective for the 2024 year end was Public Sector Standard 3400 for revenue. However, it did not result in any change to the revenue recognition policy. Management performed an analysis of all revenue sources, and although fire call revenue and compliance letters were within the scope of this new section, they did not have multiple performance obligations, and therefore there was no change in the recognition policy. So revenue was appropriately recorded and accrued and agreed to the subsequent revenue receipts. If we move on to the next page. For the engagement status, at this time, the financial statements are in draft form until those charged with governance, in this case the board, approve the financial statements as presented. At that time, we then need to complete subsequent event work up to the audit report date and receipt of the management letter for which there is a, or management representations for which there is a copy in the appendices. If we go to the next page, here are some just highlights from the statements themselves. In Note 4 is the breakdown of the accumulated surplus, and the general deficit for 2024 was $43,373, and it's been funded from the future capital reserve as passed by the board resolution at a previous meeting. Moving on. As I mentioned previously, the asset retirement obligations that became effective for the 2023 year end were recorded in 2024. Management identified an asset retirement obligation related to the building itself and set up that liability. For 2024, there was also a change in accounting estimate based for the estimated useful life of assets. During the year, management reviewed the estimated useful life of the vehicles, equipment, and furniture and found that they were needing to be replaced sooner than had previously been anticipated. As a result, the departments decreased their remaining useful life of equipment from 5 years to 4 years and furniture from 50 years to 15 years. This change in accounting policy has been applied prospectively, so going from the 2024 year end going forward. And it does result in an increase in amortization for the current year of approximately $18,200 because they're needing to be replaced sooner. So there's needs to be amortized over a lesser amount of time. On the next page, we can just see that final materiality remained the same as communicated at planning at $35,000. We are required to have a fraud discussion. During the audit, there were no incidences of fraud or suspected fraud that came to our attention. Should anything become aware, if you should become aware of any, please notify us. For internal control matters, there was no significant deficiencies in internal controls that came to our attention, so there's nothing that we need to communicate to the board. And for unadjusted differences, the only item on the schedule of errors relates to the timing of interest earned. The timing of last year's interest compared to this year when it was recorded. Should the board agree, we do not propose any further adjustments. So that's a high level overview of the main items we need to communicate to the board. If we want to jump to page 27 of this report, this is where we've just included a breakdown of the operating transactions of the year that comes down to that operating deficit that was funded from reserves. So we're comparing the 2024 actual to budget, and you can see that the total operating revenues for the year were $1.12 million, and versus the operating expenses that were $1.16 million, which comes down to that operating surplus of $43,373 that I referred to previously. And I believe at the April meeting that was passed to be funded by the future capital reserve. And then we come to the capital, yep.
Sorry, you said surplus there? Is it not deficit?
Sorry, it's a deficit.
Thank
it's
you.
an operating
Okay.
deficit, $43,373. I apologize.
That's okay, thank you.
Capital contributions, which come from George and Blobs and Meaford, for a total of $240,000 were transferred into the reserve. And then there was capital expenditures that totaled $88,932, of which $63,957 is actually capitalized onto the balance sheet, and the other $24,975 which related to building foundation and the needs study, stays on the income statement, and those were financed by reserve, grants, and some operating budget, which comes down to your ending capital reserve of $693,158. Does anyone have any questions about essentially the operating and capital transactions for the year? If not, if we can come back, we can switch over to the audit report itself. So that's the separate document. Oh. I think you want to be on PDF page 3.
I'm trying to figure that out.
Your pages are asking up.
Oh, sorry. So this one, independent audit report.
Page is that?
If it starts with this, it's then PDF page 3, but I'm not sure what your package looks like. I apologize.
Let's shows page 3.
So there was two documents. The first document was the letter that had the fuzzy mug on it. And there was a separate document that's the draft financial statements. So if we switch to the draft financial statements, page 3. Management is responsible for preparing the financial statements. The auditor's responsibility is to give an opinion on those financial statements prepared by management. An audit is the highest level of assurance that can be provided by a public accountant, and I can confirm that we are independent to give this opinion. So the second paragraph says, in our opinion, the financial statements present fairly in all material respects the financial position of the department as at December 31st, 2024, in accordance with Canadian public sector accounting standards. Therefore, it is a clean opinion, and we had no issues or concerns that came to our attention. There is a new paragraph that will be a one-time paragraph in 2024. That other matter paragraph in the middle is mandatory because the 2023 financial statements audit report was issued by BDO. It states that the financial statements for the year ended December 31st, 2023 were audited by another auditor who expressed a qualified opinion on those statements on August 8th, 2024, because the department had not adopted PDS 3280 asset retirement obligations. Since the asset retirement obligation transaction has been recorded in 2024, that qualification has been removed for 2024. So this paragraph does not impact the actual audit opinion for 2024, and it will be removed next year. I know it seems silly because it's the same space that you saw a year ago, but technically it's with a different auditing firm. So with auditing standards, it is required. The remainder of the audit report is standard wording outlining the responsibilities of management, the board, and the auditors. So if you don't have any questions about the audit report, then we can move to page 4 to look at the statement of financial position. So the statement of financial position is also known as the balance sheet. It's as at December 31st, 2024. We can see that total cash for the year was $893,694, which was an increase of $450,000 over last year. And that corresponds to the decrease in accounts receivable from the member municipalities. Because under the new operating agreement, the Inner Township Fire Department itself holds that bank balance for the reserve fund, and everything's cash flowed over. Total financial assets for 2024 came to $975,213. Under liabilities, this is where you're going to see that new line, that asset retirement obligation for $57,153. The accounting standard was new for 2023, and the department is required to recognize a liability for an asset where it has a designated substance that exceeds an existing environmental standard that and there's a piece of legislation or agreement that requires it to be remediated, even if that isn't happening until a future date. The majority of this estimated future cost relates to removing lead, ozone depleting substances, and vinyl chloride present in the building. This accounting standard was adopted using a modified retrospective approach, which means the prior period numbers were restated. This liability will be unfunded. It does result in an annual expense on the statement of operations, similar to amortization, to increase that liability as time goes by to reflect the future cost of money until it is removed or remediated. However, just like amortization, it is not part of your normal operating expenses when setting your budget. It is, however, a cost to consider when looking at your long-term capital replacement plans. So total liabilities come to $191,961. So those total financial assets less liabilities get to the net financial assets of $783,252, which is an increase over prior year as budgeted. I wasn't necessarily going to go into the income statement because we already went over what that looks like, breaking out between the operating and capital. But I will say that the next statement has total revenues of 1.3 million, less total expenses of 1.34 million, to come down to an annual surplus of $27,414. And I just want to say that this annual surplus under PSAS accounting is not the operating deficit. To get to that deficit, that's why we broke out the actual operating and capital on that other schedule so that you can see where that deficit of 43,373 came from. So that's the end of my formal presentation, unless anyone has any questions.
Questions?
Questions?
This is true. Shirley, I can't see you online, so if you have questions, please speak up. I am not seeing any. So thank you very much. That's a good presentation though, and there's no questions. So if there's no further discussion here, I will call the vote. All in favor? That is carried. And we're at the end of our meeting. Date of the next regular meeting will be July 15th at 2 p.m. Recommendation is that the meeting be adjourned at 2:16 p.m. If I could have a mover and a seconder, please. Deputy Mayor Pringle, Councillor Winters, all in favor? That is carried. We are finished. Thank you.
That was short and sweet.
That was. Thank you, Robin.
Thank you.
It's a cool time.